I talk about things, come to you live from northern Israel, and we'll be talking about Bitcoin and alts in this video, and specifically the fact that Bitcoin, or the theory that Bitcoin and alts may make you wealthy. If you've been in this space for a while, you know that one of the reasons people are in the space of Bitcoin and alts, cryptocurrencies of all kinds, is because people want to make money, and they want to do it as efficiently, and as effectively as possible. They want the highest possible returns for the least possible investment in the shortest amount of time. So that, of course, leads to a lot of greed and a lot of degenerate behavior, namely trading with over-leveraged positions that people cannot afford to lose. And so inevitably they lose it, because when the trade or the investment goes even a little bit against them, they pull out, or they don't pull out, which is even worse, and they stay in the losing position. It's actually not bad to pull out if it goes a little bit against you. Most people should do that. In fact, everybody should. If you're doing like a short-term trade, then what happens is people hold on to losing positions and they get wrecked, because the positions just keep getting worse and worse until they get liquidated, basically. So that's why we always say at Alpha Trading, make sure that on top of risk management, which is the number one thing in trading or investing, right? Always manage your risk. On top of that, you have to take profits early and often. You have to limit your loss, which means get out of a trade that's going against you. And you need to not be emotionally attached to your trades, because that's exactly, if you think about it, how the high frequency trading algorithms trade. They are not emotional. They are just bots trading according to numbers without any emotion. When you have emotional thoughts about your trade, whether it's, oh no, I'm going to lose money, or I'm not making as much as I want, and keep hanging on, eventually it will come back and bite you in the backside, because, well, that's what happens. The market gives and the market takes very easily and all of the time, because returns distribute away from the mean of returns, and returns mean revert to the mean of returns. That's all that happens with returns, and the price action just follows the returns. So when people say, oh, price of something is, the asset is volatile because the price moves so much. That's not what makes the asset volatile. It's the returns that determine which way the price will go, and the volatility determines the returns. And the volatility is not based on price. Hello there, I said hi. I'm okay, how are you? Volatility is determined by the standard deviation of returns, because that's literally what it is. Right? So it's determined by the spread of the ask and the bid, which is another way of saying it's the variance. What is the variance? It's the spread of data, which are the ask and the bid, around the mean of returns. Not the mean of price, the mean of returns. Mean of price is irrelevant when it comes to trading and investing. It's all about the returns. So why, given all those facts, is Bitcoin and our alternative cryptocurrencies likely to make long-term holders wealthy? Well, let's look at the big picture. 16, 17 years ago, in the beginning of 2008 and before, or any time before the end of 2008 and before, there were no cryptocurrencies that were globally scalable. and had the potential to have rapid network success like Bitcoin, right? Yes, there were other blockchains previous to that, but they hadn't solved the double spend issue, okay, which Satoshi Nakamoto brilliantly solved. And that really was the thing that gave the potential for Bitcoin to actually grow into a global network that is scalable. Well, before that time, right, before Bitcoin, before alternative cryptocurrencies, right, there were traditional financial systems in place. There was the stock market, there was, forex, commodities trading, etc. But there was no crypto. Since Bitcoin launched until the recent highs a couple months ago, Bitcoin's returns from zero to whatever it was, 124,000 or something like that, have returned more than 20 billion%, right? It's like 22 billion or some insane number, very high number of returns. By far the highest percentage gains returns of any asset traded on any market ever, in terms of like a real liquid asset, right, that you could actually trade, buy and sell, and etc. And you just hold it from the time it was zero until the recent highs. You'd have made 22 billion% if you sold it then, right? Which is insane to think about. And of course, anybody who's holding since it was zero and hasn't sold any, they're not likely to sell any right now because, well, they've already made 22 billion% gains, and they're obviously in it for the long term, and they probably have other means of revenues, so they don't have to worry about selling their bitcoins. And if they have some reason to worry about that and they have a bunch of bitcoins, well, they can sell some here and there and be just fine, because each coin is worth $100 and something thousand. It's a significant chunk of change, right? Now, hello there. I see you. I see your question is, please reply. I did reply to you. What happened? I think I'm talking about the big picture of Bitcoin and crypto and why they're likely to make long-term holders wealthy, right? The reason is, if you look at the arc of time since the birth of cryptocurrencies until today, the fact is that the returns have been staggeringly high for Bitcoin as well as for many other altcoins, right? Ethereum, even Solana, right, have been impressively big returns in a short number of years, relatively. And the reason that they're likely to continue to do that is because of first of all, buy pressure. People are going to keep buying this stuff, and there's a limited supply of it, right? So there's only 21 million max cap Bitcoins, right? And we know between 3 and 5 million are presumed to be lost, inaccessible, whatever you want to call it, right? Not available. So there's really only about anywhere from, 16 to 18 million actual Bitcoin that can ever be in circulation, given the amount that have been lost, right? And people continue to lose them, by the way. It's not like it just stopped 5 years ago, when people realized how valuable it is. No, people even today continue to lose access to their cryptos because they mismanage their wallets, right? They wrote down their password on some computer, not on a separate device, and when the computer dies, they lose access to their wallets. And this has been happening since the beginning of crypto, and it continues to this very day, which I know sounds crazy, but it happens. It happens even to the best of people. But in addition to the continual buy pressure that we're likely to see over time, and sure, there's obviously sell pressure, but there's generally more buy pressure if you look at the long arc of time of the market of crypto overall. People are buying them more, not less. Right? It is becoming more normalized to buy and hold crypto than it was 10, 15 years ago. That's just undeniable. And we see that by the number of wallets that there are. We see that by the number of deposits that there are in the wallets. We see that by the number of people holding these assets for the long term, right? So we do know that people are actually buying cryptos and holding them, right? That's just a fact. Now, what do we know about institutional buyers? Well, we know that institutional buyers are buying Bitcoin and altcoins at massive rates, right? They're buying them in the hundreds of millions of dollars and even billions of dollars at a time. There isn't a day that goes by, and I mean not a day, in the last couple of years that we haven't seen, apart from Michael Saylor, some company announcing that it was going to buy $100 million worth of Bitcoin, $500 million worth of Bitcoin, $1 billion worth of Bitcoin, whatever it might be, right? We see staggeringly high numbers that in any other market would be massive news, right? Some company buys $1 billion worth of this stock. That's usually a pretty big story. But in like Bitcoin land, or even Ethereum or Solana, it's like, ho hum. Now, there's only one explanation for that, or two, if you want to be extremist about it. In the case of two reasons, well, then the first reason, which is ridiculous, is that, this is no big deal. It's boring. It's honestly not a big deal. Move on. There's nothing to see here. I mean, if you truly believe that, I got a beachfront property to sell you in South Dakota. But if you understand that the biggest moneyed people and organizations are buying crypto and alts at staggering rates, you understand that entire institutions and governments are buying this stuff and are even making treasuries and national reserves and other kinds of government devices to buy and hold as much crypto as possible, then you know that the reason that the price keeps following the returns to the upside is very simply that people with a lot of assets are buying a lot of crypto. Right? There's real estate companies who are selling real estate to buy Bitcoin. Literally every day, we see another company, sometimes more than one, announcing their latest, greatest plan, and it's always inevitably, we're going to buy $100 million worth of Bitcoin. We're going to buy $1 billion worth of crypto. We're going to buy $2 billion worth of Bitcoin. We're going to buy 200,000 Bitcoins, 210,000 Bitcoins. They all want that 1% number, right? And then you look at people like, Michael Saylor, who set his company to buy 1 million Bitcoins, and he's already 63% of the way there, right? And he personally holds more than 100,000 coins. Right? He personally holds in his own personal wallets more than 100,000 Bitcoins. Which is a staggeringly high number for an individual to have who isn't one of the OG miners from back in the day, like Satoshi, right? Sure, Satoshi could easily have 1 million or more because, well, he was the first miner and he just, ran his mining machines before anybody else was and was collecting all those Bitcoins every few minutes for a good while. And even in the early days when there were very, very few miners, it was still relatively easy to score a block because there weren't that many computers mining this stuff, right? So you had a good chance of solving a block every, whenever it would be, right? In the first months and even in the first years when Satoshi was still around. So we know that the decentralization of the technology, while the decentralization is very real, the actual holdings are not decentralized in the sense that they're very centralized because they're now being held increasingly, and they're already at the point where they're basically entirely in the hands of the people who already have huge amounts, right? Whales, meaning people who have 1,000 or more Bitcoins in a single wallet, they have control over 95% of the coins, or 90% of the coins, and people with 100 more in a single wallet have 95% control. So it's basically in the hands of people who are millionaires and billionaires, right? That's who owns it at this point. It's not in the hands of the regular people, and it hasn't been for a good 7-8 years, really. Why is that? Well, it's because about 7, 8, 9, 10 years ago, depending on which organization you're looking at, a number of different companies, especially big banks like JP Morgan, etc., started looking at it and saying, you know what? There's probably something here. And they began to buy. They began to acquire, accumulate, right? Gather up as much as they could, even while they were trash talking it. And the reason they were trash talking it is because they knew that it would benefit them long term, and they would get ridiculously wealthy if they were to tell people to not buy any because it's bad stuff, etc., so that they could get more of it at a cheaper price, right? They were spreading FUD, and it worked. They kept the average buyer away, and it worked. And they knew that by doing that, they could get as much as they wanted for as cheap as possible, right? Like even literally on the day that Jamie Dimon made his famous statement that any trader working for him would be fired if they were trading Bitcoin. And that same day, he was opening a trading desk at JP Morgan specifically for Bitcoin. Like they were setting it up. Right? He ordered people to start building the infrastructure necessary to buy and trade and sell Bitcoin. I think that is kind of messed up. Well, I don't really know what to tell you. It's highly messed up. It is highly messed up. And the reason that it is so messed up, very simply, is because they were basically lying to your face. Right? Not just him, by the way. Many other bankers. He just was one of the leading voices and had one of the more memorable quotes about it. But the fact that he alone would even say such a thing kind of tells you everything you need to know about the reality of these coins and their perceived value in the minds of the world's leading bankers. They knew this stuff would be worth a lot. That's why they told people to stay away from it. And then as soon as, and I've been saying this would happen for years, as have many others, especially those of us in alpha trading, we've been telling people, the moment that this stuff hits 6 figures or whatever, some number, just a random thing, like once it's perceived publicly as some significant number, then they will begin grinding out the processes for really getting this market moving. But not until they squeeze every last bit of the currency as they can out of the hands of the holders at the relatively cheap prices and into their hands so they can sell at a higher price later. And they even introduced ETFs so that they can basically sell paper Bitcoin, which is not real. It's a promise that you will get a certain amount of Bitcoin for your investment. But when you cash out, you don't actually get that amount in Bitcoin, you get it in US dollars, which means they get to resell it. Right? So you cash out your winnings in Bitcoin, you don't get your value of Bitcoin back in Bitcoin. No, you get your value of dollars back. Right? So if you bought 2 Bitcoin and it goes up 300%, you don't get 2 Bitcoin back that are worth 300% more now. No, you just get the dollar amount. By having the dollar amount, you then need to go and buy Bitcoin with that dollar amount and hope that it's at the same price or lower when you buy it, so that you can make a little bit of a gain there and not a little bit of a loss if the price has gone up when you want to buy your 2 Bitcoins or whatever, wherever whatever exchange you want to hold them on. And probably if you just sold your holdings, your ETFs, you probably don't want to go and just buy it again, because otherwise why wouldn't you just keep holding it in your ETF, right? So they're really screwing over the investors. Why? Well, because the power of purchase, or the purchasing power of the US dollar, continues to fall, whereas the purchasing power of Bitcoin continues to rise, right? And that means that you're seeing a divergence, right, in between what you can get for $1 versus what you can get for a Bitcoin. And that will continue to be the case as long as the dollar keeps printing more dollars, right? And inflation keeps doing what people keep messing around with inflation at the Fed, etc., and interest rates and all that. And they're playing basically with completely fictitious Ponzi scheme money that's backed by the word of the Fed. And of course, backed by the word of the government and by its nuclear arsenal and its military, right? In any non-nuclear country, fiat currencies are still backed by the word of their government and their military, right? Well, that's a classic definition of not just a Ponzi scheme, but like a RICO, a racket, right? Not only and it's racketeering, and it's also extortion, because literally at the point of a gun, people in sovereign states, in any sovereign state that uses a fiat currency, are at the mercy of that government when it comes to using their fiat in order to accumulate the local variety of a currency. But the problem is that the government keeps printing more and more of that currency, so it keeps losing value, even though people keep buying and holding and selling, but mostly trying to buy and hold it. They keep printing more and more of it, so it keeps losing value. And as it loses value, well, what happens isn't good for the holder, which is why you see crazy things like when interest rates on bonds invert, right? Interest rates on bonds is one of the ways that market investors, financial professionals, normally are able to gauge whether or not a market is in growth mode or in recession mode, or is just holding stable. And we've seen inverted bond yield curves at specific times in history. Very often they happen to coincide with when markets are at the beginning of a recession. And that's why a lot of people suspect that we are now entering a recession, because we've seen that inverted curve for some time already on bonds, right? We've seen that already. Oh, I don't know, a number of months already, if not more than a year. I forget. It's been a long time since it was first pointed out in recent times that we are re-entering a recession. But the thing is, the U.S. economy and other economies around the world, despite having had all that stuff that happened 5 years ago, with all the bad times, with the disease that shall not be named, and all that other stuff, all the interest rates and all the inflation and all that, and all the unemployment, all that did not bring about a recession. Not in the US, and not in Europe, and not in many places around, not in Japan. Well, Japan, you could argue, is still in a recession since the 1990s, but it didn't get that much worse. It's been slowly degrading. The situation in Japan has been slowly getting worse over time because of the nature of the population in Japan essentially aging out and not being replaced, which is why you have a lot of kind of ghost apartments, like empty apartments in Tokyo that are available for a swan song for people who want to, buy, like, relatively a swan song or a song compared to what prices used to be in Tokyo. Right? And prices are still high there, but a lot of houses can be bought for practically nothing because they've just been left by whoever owned them and passed on and didn't have any inheritors, didn't have any heirs, to follow them. So a lot of foreigners even have been buying property in Tokyo and other places around Japan where they otherwise might not have been able to. But now the market has kind of opened up a little bit to them. And, it's also one of the reasons that the Bank of Japan artificially plays with their currency to keep it at certain rates in terms of the exchange rate in order to keep attracting foreign tourists and foreign investors, because it's important to them, because they know that they have a population problem. This all ties in because it means that even in Japan, hello there, thank you for the emojis, very nice. They know that even in places like Japan, right, the reality always changes, and the reality that's changing right now, beyond just the population itself, is that we have new financial instruments that were not available a short time ago, relatively. Like a very short time ago. And the same people that manage these economies, they are aware of these new financial instruments. They are aware that people are investing in Bitcoin, investing in alternative cryptocurrencies, all around the world, not just in Japan, but, South Africa, South America, Eastern Europe, Russia, Western Europe, North America, Canada, Mexico, whatever, the US, all over the place, the Middle East, right? Very big investing in certain areas. If you go to Dubai, a lot of crypto investors in Dubai. Right? In Israel, tons of crypto investments happening in Israel. Why is that? Because it's a new financial system. And if you want to believe that it's just a crypto pawn, whatever, I'm sorry, but you drank the Kool-Aid, okay? You drank the Kool-Aid of the old system. And if you aren't one of the people that benefited massively from it, if you're not, wealthy as hell from the old financial system, then that system hasn't served you in the way that necessarily, it might have, because it's a debt-based system that's meant to keep you from being rich and wealthy financially. Whereas crypto is not a debt-based system, right? In fact, it is not that at all. Crypto is crypto, and it has pros and cons. And one of its pros is that it basically allows you to acquire and hold an asset of which there is a limited supply and a growing demand. And that means you're holding something that will go up in value over time. Right? That's as simple as it gets. It doesn't get simpler than that. I seem to have come to a okay. Okay. Oh, all right. Okay. Um, all right, guys, I'm gonna get going because I have to do something. Talk to you later. But that's the bottom line of why Bitcoins and alts are likely to make you do well. It's because literally they are assets that keep growing in value as everything else continues to tumble in value. And the new financial system that Bitcoin and alts bring to the world are significant, globally impactful, and they will benefit the long-term holders. Of course, you can say that's all conjecture, and hey, maybe you're right. So far, all I can say is look at the last 16 years of this market. Tell me which way you think it's going. Okay. Peace.